Two bills, two different tracks, and almost nobody explained what either one actually means if you're a veteran over 60 trying to plan your next move. Just over 3 weeks ago, on July 11th, a major housing law quietly took effect. It barely got a mention anywhere. What you heard instead was the usual noise: mortgage rates, builder stocks, inflation talk. Meanwhile, a second bill sitting in the Senate right now could add real money to a veteran's monthly check every single month. Most channels are only covering one of these, if they're covering either at all. I'm going to walk you through both. I'm no expert. But every week on this channel, I cover the financial information that actually affects seniors. The rules that changed, the benefits you already qualify for, and the steps that make a real difference. If that's what you're after, hit subscribe and turn on notifications, because this is exactly the kind of thing I put out weekly. Now let's get into it. Let's start with where the housing law actually came from, because it explains a lot. It's H.R. 6644, the 21st Century Road to Housing Act, road standing for renewing opportunity in the American dream. The Senate passed its version 85-5 on June 22nd, and the House agreed to the final text 358-32 the next day. Those are margins you almost never see in Congress anymore. But here's the part most coverage skipped. President Trump never actually signed it. A signing ceremony was scheduled and then pulled, reportedly because he wanted a separate voter ED measure moved alongside it. Congress stayed in session, he took no action within the 10-day constitutional window, and under Article 1, the bill became law automatically at midnight on July 11th. No signature. Still binding. The second bill is newer and gets almost no attention. It's H.R. 6047, the Sherry Briley and Eric Edmondson Veterans Benefits Expansion Act. The House passed it 235 to 179 back on May 21st, and it's currently sitting with the Senate Committee on Veterans Affairs. It hasn't become law, so nothing in it is guaranteed, but it's moved further than most veteran-focused bills manage, and it's worth understanding now, before it either passes or stalls. Why the sudden push on housing at all? The White House's Council of Economic Advisors has pointed to a national shortfall running into the millions of homes, while independent research groups put the real number lower. Whatever the exact figure, every serious estimate agrees on the direction. There simply aren't enough homes at prices ordinary people, veterans included, can afford. Older veterans feel that squeeze in a specific way. Plenty paid off a mortgage decades ago, only to watch property taxes, insurance premiums, and repair costs climb faster than a fixed pension or Social Security check can keep up with. That's the backdrop for everything below. First, the housing law fixes something that's quietly disqualified disabled veterans from help for years. Tucked into Title VI is the Housing Unhoused Disabled Veterans Act. Before this, VA disability compensation counted as income when HUD decided who qualified for a HUD-VASH voucher, the joint HUD and VA program that houses veterans experiencing homelessness. That meant a veteran with a high disability rating could get flagged as making too much money for the very program meant for people in his situation. This provision permanently strips VA disability compensation out of that income calculation, so a veteran's earned benefit no longer counts against him when he needs supportive housing. Second, easy to miss if you're not shopping for a mortgage. Section 603, the Veterans Affairs Loan Informed Disclosure Act, or the VALID Act, requires lenders to show veteran homebuyers a straightforward cost comparison between a VA guaranteed loan and other mortgage options at the point of application. VA loans often come with no down payment and no private mortgage insurance, but veterans regularly get steered toward conventional loans simply because they were never shown the comparison. This closes that gap and gives lenders some liability protection for making the disclosure, which should make them more willing to offer it in the first place. The same law also touches small dollar mortgages and manufactured housing. It expands support for loans under $100,000 with help toward down payments, closing costs, and title insurance. A segment lenders have historically avoided because the paperwork isn't worth the profit margin, which has made it harder for veterans looking to downsize into a modest home to get financed at all. Separately, the law drops the old requirement that manufactured homes sit on a permanent steel chassis, a rule that existed mainly so a home could technically be towed, even though almost nobody relocates one once it's placed. That change matters most in rural areas where a lot of veterans live and where manufactured housing makes up a real share of the market. Now, separate from that housing law entirely, there's the annual cost of living adjustment that took effect this past December. For 2026, VA disability compensation, dependency and indemnity compensation, and VA pension all rose 2.8%, matching the Social Security COLA. That's automatic, nobody has to file anything for it. But it's still worth checking your award letter or your va.gov account to confirm the new amount actually landed, since underpayments and missed dependent adjustments happen more often than people expect. So here's what I want you to do. The benefits, discounts, and assistance programs most seniors qualify for but never use. I've gathered them all in one place, organized by state and by program, so you don't have to dig through confusing government websites for hours. It's in the first pinned comment under this video. Just tap it once. Now stay here, because the last piece is where a veteran's pension turns into its biggest number, the aid and attendance benefit, which can nearly double what you're receiving. It's the one most veterans applying for a pension never think to ask about. Back up first. The VA pension is a separate, needs-based benefit from disability compensation. You don't need a service-connected injury to get it. What you need is wartime service, an honorable discharge, and income and assets below the VA's limit, which sits at roughly $163,700 in net worth for 2026, not counting your home or vehicle. The basic pension tops out around $1,453 a month for a single veteran, higher with a spouse or dependent, calculated as the maximum rate minus your countable income. On top of that sits aid and attendance. If you need help with daily activities like bathing, dressing, or managing medication, or you're in assisted living or a nursing facility, the basic pension amount jumps substantially. Depending on the source and your situation, combined rates for 2026 run close to $2,700 to $2,900 a month for a single veteran, and higher with a dependent. It's paid to wartime veterans and surviving spouses, regardless of whether the condition is service-connected, which is exactly why so many eligible people never apply. They assume it's only for combat injuries. Two details trip people up. First, the VA looks at net worth, not just income, and that calculation excludes your primary home, one vehicle, and ordinary furnishings. So owning a paid-off house doesn't disqualify you the way people assume. Second, there's a 3-year look back on asset transfers. If you gave away savings or property specifically to qualify, the VA can still count it and impose a penalty period. On the flip side, unreimbursed medical expenses reduce your countable income and can push your benefit higher, which is why keeping receipts for home care, assisted living, or insurance premiums genuinely pays off. Now to H.R. 6047, still waiting on the Senate. If it becomes law as passed by the House, it would create a new supplemental monthly allowance of $833.33 for veterans already receiving a service-connected aid and attendance allowance, on top of what they're currently paid. The Congressional Budget Office estimates a few thousand veterans currently qualify for this category, a number expected to grow over the next decade, with the benefit rising with future cost of living adjustments. Payments would begin December 1st, 2026, if the bill clears the Senate and is signed before then. The bill also raises dependency and indemnity compensation for surviving spouses and dependents beyond the standard COLA, an extra percentage point on the next scheduled increase. Then a smaller bump after that, adding up gradually for the hundreds of thousands of DIC recipients nationwide. Not a dramatic jump in any single year, but it compounds, and for survivors on a fixed income, every adjustment matters. Two more pieces worth knowing. The bill would expand VA home loan eligibility to certain National Guard and reserve members who currently fall outside the qualifying service requirements. And it would extend a long-standing limitation on pension amounts for veterans who are hospitalized or in a Medicaid-covered nursing facility, a technical provision, but one that determines how much of a veteran's pension is protected versus redirected toward institutional care costs. None of what's in H.R. 6047 is guaranteed. It's referred to committee, not law, and Senate timelines on veterans legislation have a habit of dragging. What is guaranteed is everything already in H.R. 6644 and the 2026 COLA, since both are already in effect. The real risk with either one isn't that the benefits are fake. It's that almost nothing here arrives automatically. Aid and attendance has existed for years and remains one of the most underused VA benefits on the books, precisely because most eligible veterans never file the paperwork. If you're over 60, or you're the one keeping track of a parent's or spouse's benefits, the smartest move this week is a call to your local Veteran Service Officer or County Veterans Affairs Office, just to check what you're currently receiving against what you're actually eligible for. VSOs don't charge for this, and they're the ones who know which programs are actively accepting applications in your state right now. It's also worth setting up an account at va.gov directly, since that's where COLA adjustments, pension statements, and aid and attendance applications get processed, and where you'll eventually see whether H.R. 6047 becomes law or stays stalled in committee. The gap between what a veteran is currently receiving and what they're actually eligible for, once someone sits down and checks both columns side by side, turns out to be bigger than most people expect. And closing that gap doesn't require a new law at all.